So we'll start with the divisional performance measurement. This particular content will be applicable for an organization which has multiple divisions. Multiple divisions. Is that okay? So ABC Limited has 3 divisions, X, Y and Z. Then we can apply this concept. In this chapter, you are going to think or identify which among the 3 divisions performing better. That's what about the performance measurement for every divisions. If some of the divisions performing better, now we can identify the reasons for the better performance and is there any still scope for improvement. All these things can be analyzed. If some of the departments is not or divisions not performing up to the mark, and we'll analyze how can we improve all these things. So this will be coming under this study. And because of this divisionalization, this entire division will be now handed over to Mr. A to administrate. This may be handed over to another person. Like if you are able to decentralize to organize every division or every function, then automatically the tension of the head may be lesser. Rather than this way, if A takes care of all these things, then it will be really tough. Big tension will be there. So such a way we are splitting the entire organization into divisions and divisions like, and we are representing some persons to take care of that. Then it is called divisional decentralization. So what is the advantage of decentralization? All these things are studied here. Centralized structure, only the top management retains the majority of decision making authority. Only the top management, he is responsible for all the things. In case of decentralized structure, lower management is decision making authority. Here A is the decision making authority for his level concern. B will be responsible for Y's decision related items. Z also be responsible for C may be responsible for Z. The main feature being decision making freedom. Local manager can take timely response. Okay, he only knows what to do immediately rather than taking it to the top management who is taking care of multiple divisions, really may not be aware about the every divisions. Need for large diversified companies. Okay, and will have responsibility center. So these are the things you have to understand. Combination of centralized and decentralized structure may also be applicable here. Combination of these two. You know that centralized is nothing but all the responsibilities will be only in the hands of one person. Decentralized, it will be in the hands of all the persons. So rather than we have only centralized structure or decentralized structure in totality, we may have the combination of these two. Usually, no, the financial concern related to the investments in capital assets will be always centralized. Only the top management makes the decision, and rest of the small items will be decentralized. So that's why combination of centralized and decentralized is better one for the organization. Where major decision taken by the top management, usually the major decision related to the large investment for an expansion of any divisions. Minor decision will be given to the lower management. So we have the combination of these two. Based on this will be given to the manager's personal characters. If the manager is by default taking the responsibility of administrating properly, we allocate the work to be carried over by him. So he will also be responsible. The organization also performs better. Nature of decision required for organizational growth. What decision is given to him so that the organization growth can be easily monitored. Types of organization activities in which the company is engaged. Based on these things, the structure may be either centralized or decentralized. As per the survey, 1/3 of CFOs, chief financial officers, prefer centralized structure for treasury function. Treasury is the money management. When it's all about money management, usually they prefer to have the centralized structure, don't allow the others to spend. As this will provide better cash control, better control of operational risk. Okay, risk involves based on the investment. So you have to be double cautious here. The layer of oversight for reviewing, informing, and transactions, and lower cost, reduction of irredundant operations and all can be decided by CFO he himself. So it should be only in centralized form. Centralized structure may be at time. Though decision-making authority is delegated, but the top official retains ultimate responsibility, right? So though it is probably A may be the chief and X, Y, Z are the middle management. The responsibility of taking the decision is spreaded to X, Y, Z. Though it is spreaded to X, Y, Z, still if they make any mistake, ultimately it spoils A's result only, or A may be risk taker. Thus, a sophisticated accounting and reporting system must be implemented. A sophisticated accounting and reporting system must be implemented. Hope you will be now able to understand this one. And what are the disadvantages we have for the decentralization? Lack of goal concurrences. Every division will be responsible for strengthening their own department responsible. This will affect the entire organization's common goal. Already we have studied in transfer pricing. So while fixing transfer price in such a way to make huge profit for the division, but you should not, because of this reason, affect the overall organization's result, right? So that's what about goal congruence. Here, the goal congruence gets affected. Personal difficulties. Some managers are unwilling to take up this one, and expensive cost of training lost due to the poor decision. So these are being disadvantage of decentralization. And benefits of decentralization. What are the benefits we have? Helps top management recognize and develop managerial talent. So in an organization, around 10 or 15 employees a day, they can identify 2 or 3 top good managers who are responsible for taking the actions. We can identify and we can promote their ideas also. Greater awareness of local problems, because it's decentralized. No, they will know what happens at the lower limit immediately. They can react immediately for the requirement happens in the market. Allows managerial personnel to be comparatively evaluated. Decisions are delegated and resulting less stress for management. Develops skill level of junior manager. Can often lead to greater job satisfaction. So if you are being the manager, so most of the employees that say, I'm the main lead for this organization, I'm able to control around 50 employees, then that's what about the satisfaction they'll get, pride, right? Job satisfaction, provides job enrichment, makes the accomplishment of organizational goals and objectives easier, reduces decision-making time. Only the top management should decide, means it will take lots of time, rather than 4 or 5 managers are there for each and every small activities. Each and every managers can decide, means 4 managers are simultaneously making the decision, will be time saver. Allows use of the management for management by exceptions. Okay, MBE, we call this being MBE. We have 2 management principles here, MBO as well as MBE. MBO represents management by objectives. The common organization's objectives are broken down into smaller objectives and making divisional head responsible for every objectives. So as each and every divisional head is responsible for their own objectives to be achieved, and organization's common objectives may be achieved comfortably. That's called management by objectives. For example, A is the top management and they have 4 divisions carried by I, J, K, L. Okay, these are the 4. And A wants to make a profit of rupees 1 lakh rupees. Now, A divides this to X, Y, and Z. So, for I, the target given to divisional head I being 30,000 profit to be earnable, Y, J also, K also, L also. So rather focusing to earn 1 lakh rupees by A himself is really tough. Rather than that, now I is responsible, or A makes I responsible for making 30,000 rupees profit. Never bother about anything. So A instructs to I, your target is to reach 30,000 rupees profit. That's all. Similarly, J is responsible for 30 and K is responsible for making 20,000 rupees profit. L is responsible for making 20,000 rupees profit. These are the objectives of every division. If every division head is responsible and meeting their own goals, automatically what happens? A's goal is met. That's called management by objectives. The objectives of the organization broken down into smaller objectives and making somebody responsible for every small objectives. By making the every small objectives achievable, the target is also met. Management by exception is nothing but A may divert this to I, J, K and all. In this case, A constantly monitors whether I can reach 30, J can reach 30, K can reach 20, L can reach 20. So A will always call for a monthly meeting or quarterly meeting, whatever it may be, and inquires whether I is capable of meeting 30,000 rupees. Are you in a right track? Like, so you have to monitor. All the divisions are monitored. But when it's all about MBE, the same target 1 lakh is fixed. Okay, 1 lakh is fixed. And IJK are responsible for earning around 30,000 rupees, 30,000 rupees, and 20,000 rupees, and 20,000 rupees. Okay, 20,000 rupees. Is that clear? Every month end or quarterly end, they will not be meeting, but probably K seems to be earning matter of just 10,000 only. So we now come to know that K is not capable of reaching their target. Immediately, A calls for K for the discussion of profit reduction. And after analyzing, now A may give some suggestions to increase this to reach 20,000 rupees. Here, A monitors all. Here, A monitors only exceptional item. What is an exceptional item? All are meeting with the goal, no problem. Why do I then bother? Okay, what happens if you are coming to the class regularly? What will you do? 9 o'clock class. Okay, it takes 10 minutes to reach. Then exactly 8:50 you'll start moving from your home. Okay, that's all. Will you bother about taking the note, calculator, pen and all? Never. But what happens in the case of examination? If the examination is 9 o'clock, it takes half an hour to reach, then you'll start by 8 o'clock, half an hour ahead. Not only that, you will cross verify whether do you have the hall ticket and calculator and pen. Safer, you will have one more pen. And all these things you are preparing, right? So your preparation, attention for preparing for the examination is higher because it's an exceptional, it's not the regular day. So monitoring every day will be tougher, but in the case of exceptional days, we can simply put our attention to monitor that exceptional days so that our stress will be lesser. That is what about management by exception. Management by exception allows the use of management by exceptions because n number of divisions are there and every division is administered by a divisional head. Monitoring those divisional heads' performance seems to be varying from the objectives and immediately call for and try to resolve that rather than monitoring all. Okay, that's similar to preparing for the examination alone. And everybody will have separate responsibilities. So benefits of decentralization. Clear? Hope now you'll be able to understand the first content in this divisional performance measurement. Now let's start with the DuPont analysis. This 6.2 is all about performance measurement tools. How can we see? Now we identified that divisional performances will be based on the MBO or MBE, whatever it may be, you can monitor. Because of this one, you are decentralizing, you can monitor everything perfectly easily. No problem there. But among the 4 or 5 divisions, I need to know which division is performing better or not. And for deciding that and to increase the profitability of the divisions, we now use the DuPont analysis. The DuPont analysis you might have studied in your ratio analysis, right? So I'm going to recap the same idea from there. So what is the intention? What is the intention? ROE is the intention. Return on equity is the intention. Am I right? Every CFOs are responsible, CEO or CFO is responsible for the financial, usually investors, equity shareholders. Equity shareholders will be happy if their return is higher, then they will value the company's worth higher. So CFOs are ultimately working for equity shareholders. So equity shareholders are happy when their return is higher. So return on equity will be the most important component here. Right. This return on investment equity is nothing but profit available to the equity shareholders, PAT, divided by equity shareholders funds. It is not PAT. profit after tax minus preference dividends. Earnings available to the equity shareholders divided by equity shareholders. The main intention is to increase this one. Now, to increase this one, DuPont analysis suggested three factors. Three factors. One is operating performance. If you work better, you can make good profit. Am I right? If you work better, you can make good profit. Am I right? That is called operating performances. Work better means increases sales. NPR, net profit ratio. Net profit by or PAT by 6. And second one is how effectively you are using the asset. You have 1 lakh rupees cash in your hand. Using the cash, you can purchase for 1 lakh and you can sell this for 1 lakh 20 and you can make a profit of rupees 20,000 decent. This happens in a year. Another fellow starts with the same 1 lakh, purchases 1 lakh rupees worth of stock and sells it for 120. With this, within a 6 months itself, per semester itself. So he uses the 1 lakh rupees, purchases the material and sells the material. Matter of 6 months itself, one fellow sells it in 1 year. This fellow finishes selling that in only 6 months. It means 1 lakh invested, 1 lakh 20,000 earned, 0.2 is your gain per semester for a year. 40,000 rupees is the gain. What is the investment they have done? A also invested 1 lakh. This case also invested 1 lakh. Here for the 1 lakh 20% means 20,000 means 20% earned. Here for the same 1 lakh 40,000 rupees earned means 40%. Because of rotation, number of time you are selling. Here how many times you sold? 2 times. The sales being 2.4 lakhs. Because of increasing the sales for the same investment, your profitability is increasing. Rotation, turnover, activity should be. So the activity will be here. Asset usage ratio. This is called asset usage or performance. One is working better. Another one is actively involving the assets to earn the profit. So here asset turnover ratio. The formula being sales by asset. Next one is all about leverages. In financial management, you might have studied the leverages. 1,000 rupees if you have and your profitability being 10%. So your PAT being 100 rupees. Okay, this is what about your investment. This is what about your investment. Capital employed. For the capital employed, you get 100 rupees means 10% is your return. Whatever the capital employed you have on that 10% you will be getting. This capital employed is purely equity. Then what does it mean? For the equity you are getting 100 rupees, otherwise 10% is your return on equity. Now this fellow, other fellow says, we can borrow, sir, my money is 1,000. We can borrow loan at the rate of 5%, 1,000. Now the capital employed in this case being 2,000 rupees. One fellow started the business with his own fund. Okay, for the 1,000 rupees of investment, this business gives you 10% return, so 100 rupees. Equity shareholders funds is 1,000. For that, they get around 100 means 10% is their return. In case the another fellow who uses his own fund 1,000 and gets another 1,000 rupees debt, that debt carries 5% interest. Overall being 2,000 rupees. What is the return? Whatever the amount invested, 10% will be returned, so 200 will be the return. In that 200 rupees, for this borrowing, you have to pay the interest. For 1,000, 5% being 50 rupees will be interest is paid. After that, 150 is used for whom? Equity shareholders. For the equity shareholders of 1,000, they are getting 150 means 15% will be the return. They are capable of earning only 10% on the capital employed because of adding some cheap finance, cost-effective finance like the debt or preferential shares if it is so. They are able to increase the returns available to the equity shareholders. This is called leverage. You might have studied that in leverage chapter, NA approach and NOA approach. You have to connect this with financial management. So here, leverage, financial leverage. This is called financial leverage. As per this one, we have to find out the equity multiplier asset by equity shareholders fund. Asset may be the overall investment 2000. Out of the 2000 rupees, how much is your own fund? 1000. Okay. So you have the assets almost two times of your equity shareholders. How it is possible? Another 1000 rupees could be financed by the debt. Clear? Hope you will be now able to understand. Equity multiplier is usually assets by capital employed. That way also you can think over. So the division's intention is to make good profit. The good profit means PAT. That return on equity equity capital should be higher. How can we increase that? That can be increased by analyzing three factors: whether operating performance is better, or asset performance is better, or leverage is properly used. Based on that, you can decide whether this business is doing well or not, or you can try to rectify or improve any of the factors. This is the formula. See, DuPont chart by DuPont company. This was initially introduced by DuPont company. Return on equity is equal to net profit ratio, asset turnover ratio, and equity multiplier. Significance of DuPont. The company can increase return on equity. What's the ultimate goal? Increase the return on equity. Means generates high net profit margin, or uses the assets effectively, or optimum financial leverages. So because of these reasons only, return on equity can be increased. That's what about the significance of DuPont analysis. The main disadvantage of DuPont analysis being, DuPont analysis depends on accounting equations, but that can be manipulated. There may be chances to cheat by manipulating these values by the accountant or by the owner. So we cannot sometimes relate. Chance of wrong interpretation of individual ratios. You may get wrong interpretations for individual ratios. These are the two problems we have. Now try to solve this illustration. SSA company's details are revenue 1 lakh, net income 15,000, asset 80, equity being 50. Now in case of operating performance, PAT by sales, PAT being 15,000, sales being the revenue in this case being 1 lakh. Now 15%. And asset performance, sales being 1 lakh, asset being 80. Now the ultimate value being 1.25. You can represent in terms like 1.25. The last equity multiplier being asset being 80,000 rupees and equity shareholders funds being 50,000 rupees. The difference between these two may be funded by debt. Now this value being 1.6. If you multiply these three, this will be the ultimate return for the equity shareholders. Come on, tell me this value. 30%. Or you can apply this formula also to get this answer. PAT in this case being 15,000 numerator, equity shareholders funds being 50,000 rupees. If you represent this way also, you'll get the same answer. So from this very clear, ROE depends upon the three factors: better net profit on sales, and better utilization of the assets, means linked with the assets and sales. And next one is better linked with the capital structure, which is called financial leverage. Hope you'll be now able to understand. I hope you might have studied this at your means a financial management lecture itself. If it is clear, text me. Let's move on to the next illustration. See, in DuPont analysis, a variation is there. 5 steps DuPont analysis. In the 5 steps DuPont analysis, return on equity, which is nothing but net income or PAT divided by shareholders' funds. The normal. Now, this particular component is subdivided. This particular component subdivided. Okay. Now, what to do now? This operating performance, is going to be subdivided here under 5 factor. This one, okay, this one. First formula being net income or profit after tax. Okay, profit after tax divided by profit before tax. Okay, then profit before tax divided by operating income or operating profit. Then next one being operating income or operating profit divided by sales. If you club all these things, what happens? PBT numerator denominator cancel, OP numerator denominator cancel, only PAT by sales will be there. Okay, again only this component operating performance is subdivided into 3. This one is all about what? Tax burden. To check whether this company gets affected due to the tax burden or not. Another one is PBT by operating profit. C, sales 1000, operating expenses 6. Okay, operating expenses 600. Operating expenses 600. You will get operating profit. From there, financial expenses, interest being 100 subtracted, you will get earnings before tax. Now tax being 30%, 90 rupees is subtracted. Profit after tax being 210. Usually operating performance is nothing but the relationship between these two, isn't it? PAT by net profit ratio, PAT by sales 21%. Am I right? This will be now segregated this way. What about the tax effect? What about the interest effect? What about the regular earnability on your sales if you are not having the interest and tax? Right. In this case, 210 by 300, 210 by 300, 70%. Am I right? 70% means 30% being interest component, 30% tax component, sorry. And between these two, 300 by 400, 75%. It means 25% of your operating profit used for the interest payment. Now you will be very perfectly analyzed. Okay, this one PBT by operating profit 75% means you are paying around 25% interest. If it is only 50%, you are paying almost 50% tax. If you are getting this value only 10%, you are paying 90% for the taxation, interest alone. Now your intention is to reduce the interest component. That's how you still minutely decide in which factor you can focus to improve so that ultimate return on equity can be improved. And this one, sales by operating profit 40%, 400 by 1000, 40%. Now multiply 40%, 0.4, 0.75, 0.7. You'll be getting, I think, 0.21, otherwise 21%. Hope you'll be now able to understand. So 5-step DuPont analysis where the operating profits are again subdivided into 3 more factors here to focus perfectly where you have to focus, right? Clear? Now, let's see. I'll try to solve this illustration now. I have to solve this. Here we have been given sales, each, interest, tax, everything. First you prepare the format. Sales, operating expenses, you'll get operating profit minus interest, you'll get earnings before tax or profit before tax minus tax, you'll get EAT. Sales being 10,000, EAT being 1,400, interest being 200, tax 600. You can finish off reverse calculation. EBT should be 2000, am I right? In reverse calculation, minus becomes plus. 1400 plus 600, 2000 plus 200, 2200, 7800 being the operating expenses. Hope now you'll be able to understand this one. You feed the data in this format, you'll get the answer easily. First case, PAT by PBT, this one. First, tax burden, this will be interest burden, this will be operating efficiency. So 1400 divided by 2000 in percentage, 70%. Here 2000 divided by 2200. Come on, tell me what's the percentage here? 90%. Is it so? Okay, 90.9%. Okay. So 9.1 being the tax interest burden. Here 30% being tax burden. And finally, operating profit 2200. Your sales being 1000, 10,000, 22%. 78% is for operating the business. You multiply all the three, you will get this value. 14%. Am I right? Clear? 70 into 90.9 into 22%. You'll get 14%. In case of asset performance, asset turnover ratio will be taken. So sales being 10,000, asset being 5,000. 6 times you are operating. Is that okay? Sales 10,000, sorry, sales 10,000, asset is 5,000. Then 2 times, okay. Two times. And equity multiplier, asset being 5,000, equity shareholders funds 3,000 rupees. 1.67 times. If you multiply these three, you will get this value. Yeah, tell me. 14 into 2 into 1.67. What's the value? 46.76%. See, you can multiply the, you can get the answer directly here also. PAT in this case being 1400 by sales. Sales 10,000. You will get this answer directly. Here PAT being 1400, equity share capital being 3000. Hope you will be getting this answer. Clear? So 5 factors model, we consider first part is tax burden, second part interest burden, third operating margin. Rest of the two already we have seen in the 3 basic DuPont model, 3 factors model. Clear? Come on, make note of it. Okay. Six point three, divisional performance measurement tools, ROI and RI. Already I used these terms in transfer pricing. See, your capital employed being 1000, your cost of capital being 10%. Okay. Profit after tax being 150. You can calculate the profit after tax easily. Sales minus operating expenses and all, you can do the way how we calculate in the earlier case. In case of ROCE or ROI, how do I calculate? This one also is studied in your ratio analysis, ROCE and ROI. Return on investment, return on capital employed. Investment and capital employed are the same. 2 terms are there in this ratio. Connected by on means the first term should be numerator, second should be the denominator. Return by capital employed or investment. That's how I guided you to remember all the ratios in ratio analysis. Is that okay? Now, in this case, ROI or ROCE, okay, is equivalent to what? Apply this formula. Capital employed is the denominator value for PAT being the numerator. 150 by 1000, 10%, 15%. Now the question is it really doing good business or not? Doing good business or not? For this question, if the ROI is higher than the company's cost of capital, we can recommend. Here the company's cost of capital being 10%, but this company generates 15%, definitely accepted. Okay, 10%, 15% is generated, and your cost for investing this business is 10%. You are capable of earning 5% excess. This is called ROI based analysis. In case of RI, residual income, capital employed 1000, KO also 10%, PAT also 150. These things are same. How do I calculate RI? RI, residual income, is nothing but normal expected return on your investment should be subtracted from the PAT. Usually, you know, ROI, while calculating the ROI, return to the equity shareholders not debited to the P&L account. Am I right? If you borrow, for the borrowing, any interest payment can be debited to the P&L account. If you raise the fund by issuing the equity share capital, will you debit the dividend to the P&L account? Usually not so, because dividend is an appropriation. Whatever the profit left over is appropriated to the owners. But in case of borrowings, it's a charge so debited. RY thinks about only charge, but RI thinks, don't worry, sir, not only interest. You try to understand owners, equity shareholders also expect some money, some return, no? That also be considered as your expenses. Subtract that. Ultimately, if you are getting any profit, that is called wealth creation. The business is really doing well. So, minus capital employed into KO. You have to multiply these two. Equity shareholders invested 1,000 rupees. As for the other investors, this equity shareholders also demand some minimum guaranteed money. So 10%. So the 10% and this being 100 is subtracted. Now I'll tell to the equity shareholders, sir, as you expect 10% is given, but another 50 also I earned for you. You are happy now. So this is called residual income. Residual income. So whenever it's all about residual income, from the PAT, deduct the normal return expected by the equity shareholders. After deducting, if the RA is positive, then this division is performing better. So this is negative, then not chosen, but positive, then chosen. Is that clear? Companies usually evaluate the performance based on profitability. Company's performance is always decided based on the profitability only. But profitability takes care of cost of debt, isn't it? Okay, in your P&L account, your net profit is calculated only after charging interest. That is called cost of debt. Ignores the cost of equity. Do I debit the dividend here? No, sir. Because net profit is calculated only after considering the interest component, never bothering about any returns payable to the equity shareholders. And the company's wealth will increase only when the company's wealth increases, only if there is an excess compensation over the investment. If I invest as equity shareholders thinks, if I invest 1,000 rupees, for the 1,000 rupees a decent return, 100 rupees just paid. Beyond that, if you are getting any money, can be reinvested, then the company's wealth will be increasing. Okay, that's the reason. Hence, for divisional performance, ROI and RI can be appropriate. In case of RI, positive is good. In case of ROI, your return on investment is higher than the return expected by the equity shareholders or cost you consider for the equity shareholders, KO or KE. If the ROI is more than KE, you are happy that this company is growing. If the RI calculation is positive, then also this division is performing better. So hope you will now understand these two performance appraisal tools we have. Divisional measurement, performance measurement tools. These two predominant tools. ROI is otherwise named as capital employed. Clear? See here. Return on investment or return on capital employed, the formula is the same. ROI measures the income generated from operational assets. EBIT is taken because tax is just an appropriation, so usually we will not take the tax. Interest is due to financial decisions. Okay, so only these two are taken. Usually in ROI, instead of PAT, you can take the EBIT. EBIT. Why is our interest taken, sir? That is also debited in P&L account only now. Of course, we are talking about the capital employed. Capital employed comprises equity, preference shares, as debenture holders. Based on the capital structure decision, you either pay interest or don't pay the interest. If you have the loan component in your capital structure, you will pay the interest. If you try to fund your company's requirement out of equity share capital itself, you don't have the interest payment. So the interest payment is based on your financial decision. So forget about that. That's how the concept is given. ROI is always EBIT by capital employed. Use of ROI. Financial reporting for users. Aggregation. Okay, aggregations measure for a division or a company as a whole. For both, this can be used. Residual income. Calculate divisional or performance measurement. Divisional profit minus divisional investment multiplied by the required rate of return. Okay. RI is more than target, then accept. Yes, RI overcomes the weakness of, okay, reject. Okay. If RI is more than the target, residual income is, say, Here we get 50 rupees. Positive, okay, can accept. Or the company will fix the RI should be 25 or 30 rupees. Like if your real RI is more than the target, then you can accept, else you can reject. RI sometimes overcomes the weakness of ROI. ROI some weaknesses. Because of that reason, RI is most preferable compared to RI. So ROI. Clear? Now, come on, question number 1. Now, SBB, a division of SSA, has assets 10 lakhs. And operating income being 2 lakhs. Operating profit 2 lakhs. What is the division's ROI? Division's ROI is equal to operating profit by capital employed. Capital employed is nothing but investment made for the assets. 20%. Am I right? 20%. And if the minimum rate of return 12%, what is the divisional residual income? Usually the rate of return is very much for what? RA calculation. So asset being 10 lakhs, your operating profit being 2 lakhs, minus what? Capital employed into return expected. Capital employed is nothing but amount invested in the asset. Return expected in this case for the equity shareholders being 12%, 1.2 lakhs. After subtracting that, if you get any positive value, then it is accepted. So you will be getting around 0.8 lakhs. This is called NI. If nothing is stated, then NI being positive will be chosen here as accepted. Else the division is not performing well. Okay. Shall I move on to the next one? Now, SSA has 3 divisions whose income statements and balance sheet are summarized as below. We have 3 divisions. You have to find out the missing data. Yeah, you can calculate all the missing data. A, B, C for division X. Sales minus operating expenses, you will get operating profit. Understand? So for division X, sales being 5 lakhs, operating income being 50,000, so 25,000. Asset being 1 lakh. This asset is usually capital employed. Now asset turnover ratio, sales by asset. Sales being 5 lakhs, asset being 1 lakh, so 5 times. B, margin. Margin is nothing but out of your sales, what could be the profit? Operating profit by sales. Margin may be GP, net profit, even operating profit. As we are not aware about the GP and net profit, we assume operating profit will be required for the margin here, operation margin. Okay, operating profit ratio. The operating profit being 25,000, sales being 5 lakhs. What's the percentage? 5%. C, return on investment, EBIT, earnings before interest and tax divided by asset. Investment is nothing but the asset. EBIT in this case being 25,000, we assume that operating profit itself EBIT. Asset being 1 lakh. So then it is 25%. Is that okay? Already this operating profit is assumed to be the EBIT. We have studied this term in where? Where? Capital structure. This is named as net operating income, otherwise EBIT. Okay, net operating income you studied in your capital structure is equivalent to the EBIT, and NI, net income, is equivalent to the residual income. Like normally, understand? Shall I go for division Y? Come on, make it faster. If it is clear, text me so that we'll finish up division Y and Z. I may try to finish up chapter 6 and 7 by today. Now we are completing 6.3. Here 6.5 only requires more time. I need 1.5 hours like for 6.5. Once the topic is over, the rest of the things are very simple. For every content, it's 15 minutes or half an hour only. The decision theory will finish up by the next class. Monday or Tuesday, we'll finish up decision theory. Okay. Shall I move on to the next one? Yeah. For Y, sales, operating income, asset or capital employed. Sales not given, operating income being 30,000 rupees. Right. Here we have been given these two. Margin. In case of margin, operating profit or EBIT by sales will be the formula, which is 0.4%. 4%. Otherwise 0.04. Am I right? 04 or 004? 004. Between these two, we now know operating expenses. Operating profit 30,000 rupees. Then you can find out the sales easily. Sales is equivalent to 30,000 divided by 0.004. Come on, get me the value. 75 lakhs. So we got this value being 75 lakhs. Then we have been given return on investment, EBIT by asset, which is equivalent to 2%, otherwise 0.02. We now know the EBIT, which is 30,000 rupees. Then asset in this case is equivalent to 30,000 divided by 0.02. Come on, tell me. 15 lakhs. So we got the assets value also 15 lakhs. Asset turnover, F, sales by asset. Sales by asset. Sales being 75 lakhs and asset being 15 lakhs, then ultimate value being 5 times. Clear? I think for division Z, you can try it yourself. Just applying the formula, we'll move on to the different content in the same chapter. Different content. I may try to finish up the additional problems also. Concept is over. Concept for RI and RY is over with this. And additional problems for better understanding, I have added 4 illustrations. So we'll try to finish up all the 4 illustrations now. Now we'll move on to the next one. So Z you can try it yourself. So let's move on to the next additional problems. A division is considering investing in capital equipment costing 27 lakhs. So the capital employed being 27 lakhs. The useful economic life of the equipment expected to be 50 years with no residual value at the end of the period. Life in years being 50 years. The forecast return on the initial investment is 15% per annum before depreciation. So, EBITDA or profit before depreciation. Profit before depreciation. Is equal to 15% on investment, not 15% on sales, 15% on investment. The division's cost of capital being 7%. What is the expected residual income? Now find out the first of all profit before depreciation. 27 lakhs is invested, on that 15% is your profit. 4 lakhs 5,000. From there you have to subtract the depreciation. 27 lakhs is the amount invested, has life of 50 years. So year on year depreciation being 54,000. Now we will be getting 3 lakhs 51,000. This is called profit after tax. From that I have to subtract what? Expected return for the equity shareholders, capital employed into cost of overall capital. Capital employed is nothing but the investment made in asset. If nothing stated properly, then 7% expectation is there on this cost. 1,89,000. If I subtract this, then ultimate value be NI. 1,62,000 will be the NI or residual income. Hope you will be now able to understand this one. Next, question number 2. At the end of 2024, an investment center has net assets 10 lakhs and annual operating profits being 1,90,000. Okay, net asset 10 lakhs, operating profit being 1.9 lakhs. The bookkeeper forgot to account the following. The machine with the net book value 40,000 was sold at the start of the year for rupees 50,000 and replaced with a machine costing rupees 2,50,000. Right. So this is the error of omission. Both the purchase and sale are cash transactions. No depreciation is charged in the year of purchase or disposal. The investment center calculates return on investment based on the closing net assets only. So, return on investment is equal to, okay, EBIT divided by EBIT or operating profit divided by closing investment will be taken in percentage. This net asset is nothing but investment only. Okay, but it has some error. Now it's your duty to rectify the error. Assuming no other changes to profit or net assets, what is the return on investment for the year. So one of the interesting illustration, because the sum is very simple. ROI calculation is very simple. They made slight missing data like to make this sum complicated. Now, find out the investment first of all. Capital employed. Capital employed given being 10 lakhs. But there is an error. A machine with a net book value 40,000 was sold at the start of the year for 50,000 rupees and replaced with a machine costing rupees 2 lakhs 50. So what happens here? For sale, what is the journal entry? For sale, bank account debit to machine account. Machine account being 50, bank account being, machine account being 40, bank account being 50. But you made a profit on sale. Profit on sale 10. And there's a purchases. Machine account debit to bank 250. One of the interesting illustration. I put the value in thousands. I put the values in thousands. Rupees in thousands. Now, capital employed is nothing but the amount invested in the assets. Because of this error, the capital employed being 1000, if you are correcting this, what could be the balance sheet assets value? Bank debit will come in, right? Asset increases, yes or no? Machinery credit, machine old, that goes out. What happens? Asset value decreases. And one more asset purchased plus machine. Okay. New asset purchased. Because of that 250 increases. And we have made a payment, bank payment. This is receipt. Payment will be outflow of cash. Now ultimately what happens? 1000, 10 will be the increase in the value of the capital employed. One of the beautiful illustrations. What could be the change in the assets in your balance sheet? Okay, if you think over this way in your balance sheet, okay, machine 40 minus 250 plus, so 210 increases. In case of bank, 50 plus 250 minus 210 minus 50, 200 minus. Ultimately, increase is only 10. From 1000, I have to add only 10. Directly, you can think over, but it is better to make you understand by passing the journal entry and change in assets is incorporated so that without any tension, you will get the change in capital employed. Similarly, profit, operating profit. Operating profit given, how much is that? 190. 190. In this still we have one item to be posted. If you are posting this in your P&L account, profit on sale, your profit will be increasing by 10. So then this value being 200. Based on this revised value, 2 lakhs divided by capital employed being 10 lakhs 10,000 rupees, you can calculate the return on investment. I think it is 19.8. One of the beautiful illustrations. ROI is very simple, but there is an error, so we have to rectify the error and we have to apply the ROI calculation. So I have given this an additional illustration here. Now, let's move on to the next illustration. Question number 3. If you are clear, text me so that we'll move on to the next one. Here, capital employed as well as operating profit both are calculated. Make it faster. Now, question number 3. At the start of the year, a division has non-current assets rupees 40 lakhs. Non-current assets 40 lakhs. And makes no additions and disposal during the year. Depreciation is charged at the rate of 10% per annum on all non-current assets held at the year end. Working capital is 5 lakhs. Okay. Working capital. Working capital is nothing but current assets minus current liabilities. Current assets minus current liabilities. 5 lakhs. And this 40 lakhs is before the depreciation, so you have to subtract the depreciation. Opening WD value. Depreciation rate applicable for this being 10%, 4 lakhs. Closing WD value being 36 lakhs. So year beginning we have non-current assets 40 lakhs before depreciation. For the year's use, depreciation 4 lakhs is subtracted to get the closing WD being 36 lakhs. Working capital 5 lakhs at the start of the year, although this is expected to increase by 20% by the end of the year. So by the end of the year, 20% increase is 1 lakh. So hereafter it is 6 lakhs. The budgeted profit of the divisions after depreciation is 12 lakhs. So operating profit in this case being 12 lakhs. Estimated. And opening WDV being, opening capital employed being 45 lakhs. But closing capital employed being 42 lakhs. Am I right? So operating profit is this one. ROI should be calculated. Based on what? Average capital employed. ROI is equal to operating profit divided by capital employed. But in this illustration, it's clearly stated you have to take average capital employed. If nothing stated, then you can directly go for the closing capital employed itself. But in this illustration, it is clearly stated that you have to take only the average capital employed. So the operating profit in the numerator being 12 lakhs and average capital employed being opening plus closing by 2. 43.5 lakhs. Represent in percentage 27.59%. Is that clear? Make it faster. Now, question number 4. If it is clear, text me. Yes. The following information relates to the operation performance of two division SSA for the last year. Compute the return on investment of each division using the total assets stated at acquisition cost as the investment base. So what you have to take? Acquisition cost will be taken for calculation of ROI. Compute the ROI of each division using total assets based on current replacement cost. Which of the two measures do you think gives the better indicator? Now ROI, where capital employed being acquisition cost. ROI is equal to operating profit by capital employed. 8 lakhs by 40 lakhs, what's the value you are getting? 20%. For here, 12 lakhs by 75 lakhs, 12 by 75, 16%. Now, again ROI, where in this case capital employed is based on replacement cost. Replacement cost. Then 8 by 60, 13.33%. Here 12 lakhs by 80, 15%. Now, as per the acquisition based cost model, you recommend that SBB division is performing better, but replacement cost model set performing better. Like that's how you can choose. The third question: which of the two measures do you think gives the better indications of operating performance? Come on, guess me. Guess it. Which is better among these two? Cost based or replacement cost based? Replacement cost. Why? See, A, his capital employed being 10 lakhs and says his return on investment is 20%. When you are investing in the bank, you get matter of 7% return. But in stock market, of course, you have to be a risk taker. But here, once you invest 10 lakhs, you are getting almost 20% in return. So you'll be very happy to invest. Yes or no? Now, you seeing this one, you started investing, you invested 10 lakhs rupees. But your return in this case is only 5%. This is your case. You are now fighting with A. Relying on you, I invested, then I lost my money. You told me for 10 lakhs you are getting 20%, but I invested 10 lakhs rupees, but I am getting 5 lakhs only. After that only we came to know this 10 lakhs rupees invested by A, in 2010. By the time this 10 lakhs, okay, he got around 400 square feet land and building, and 400 square feet land and building rented for 2 lakhs rupees income per annum. I purchased this land and building for 10 lakhs rupees in 2010, almost 15 years ago. I purchased 400 square feet. For the 10 lakhs rupees, 20%, 2 lakhs I am getting as a rent per year. This fellow purchased the same land in 2025. For the 10 lakhs, because of the price hike, he got only 100 square feet. For 400 square feet, 2 lakhs means, as per the current rental scenario, for 100 square feet, it's only 50,000. So for 50,000, for the 10 lakhs rupees he has invested, he gets only 5%. So before you start investing based on the ROI, you just cross check at what point in time he invested. If I want to invest the same assets, how much I have to spend today's value? Today's value of this one may be 100 square feet, 10 lakhs means for 400 square feet, I need to invest 40 lakhs. So definitely what happens, capital employed is increasing, natural denominator value is increasing, your end result will be decreasing. So it is advisable to cross verify whether the investment is made at the current price rate. Only then it will reflect correct one. Hope you will be now able to understand. Which of the two measures do you think gives better indication? Only based on the replacement cost. Hope you will be now able to understand all the variations here. With that, ROI and RI over. So what are the content we discussed here? We discussed about this centralization and decentralization and DuPont analysis, 3-factor and 5-factor model we discussed. And then now we discuss ROI and RA also. ROI and RA. Now we'll move on to the next one. EVA model. EVA model. Shall I go for that? Come on, make it faster. Make it faster, make it faster. Online students, come on. We'll move on to the next one. Economic value added. So what are the content are going to be covered here is nothing but definition, EVA center, EVA drivers. In simple sense, though the term is different, EVA is similar to RI. How do you calculate the RI? RI is equal to, you get the profit after tax, whatever it may be, profit after tax minus capital employed into cost of capital. EVA in this case is equal to NOPAT, net operating profit after tax. Never bother about the interest component or other thing. Net operating profit before tax. Here also you will take the operating profit only, no? Similarly. Net operating profit after tax minus capital employed into cost of capital. Okay. You will now segregate your organization into divisions. For every division, what is a NOPAT? From that, you have to subtract the return expected on the capital investment made for that particular division. Actually, EVA is applicable for the entire organization of whole. At your final, you will study about the business valuation model. How can we value the business? What about the NOPAT of the business? What is the investment made on that? For that investment, you subtract the expected return to get the economic value added for the business. The same EVA concept is used for the division's performance. What could be your capital employed for a division multiplied with the KO is going to be subtracted from the NOPAT to get the economic value added, which is nothing but RI. Usually in your examination, you may suppose to calculate the KO also. How do you calculate the KO? How do you calculate the KO? KO is equal to weight of debt, cost of debt, plus weight of equity and cost of equity. That you studied in your financial management. The same concept will be applicable here. How do you calculate the KD? KD is equal to irredeemable means interest by net profits into 1 minus T. KD after tax. How do you calculate the KE? You have n number of models for the calculation of KE. Anyhow, CAPM model is used here. As per the CAPM model, RF plus beta into RM minus RF. So this, especially this content, what we are covering here as well as in the subsequent lecture, is better you need to have the base of financial management, so you can directly apply here. So in case of EVA, KO should be directly given. Anyhow, as you are studying advanced level, KO you might have studied in your firm is applied here. That's all. EVA is a value-based financial performance measure, an investment decision tool, and it is also performance measure. Okay, investment decision tool as well as performance measure. Can we invest here or not is decided based on EVA. Also be a measure for your division's performance, absolute amount of the shareholders' value created. EVA is a refined residual income measure. It's also a residual income measure only, but refined for divisional financial performance measure. This EVA was developed by US consulting firm Stern, Stewart and Co. and later used by well-known companies like Siemens, Coca-Cola and Herman Miller and all, right? Hope you will be now able to understand EVA. So EVA is equal to what? Residual income. So the formula is here. NOPAT minus capital employed. So all these things are already discussed. Some other point to be noted. In case of multiple years, beta is given. This beta given for multiple years, then highest will be taken always. Net operating profit, NOPAT. No PAT is nothing but PAT plus interest. Okay, PAT plus interest after tax. Either this way you can calculate or EBIT into 1 minus T. Okay, you should not subtract the interest component. Interest should also be forming part. If there is any tax, that tax only should be removed. To remove the tax, you have to remove the tax only from interest, not other cases. Is that clear? Hope now you'll be able to understand this part. Okay. Now, PAT, interest and EBIT. Financial leverage formula is also given, EBIT by EBT. EBIT by EBT. Hope now you'll be able to understand this one. We'll try to solve this illustration. EBIT by EBT. Question number 1. A person made a capital investment of rupees 2 lakhs. Capital investment. Capital employed 2 lakhs. Operating profit after tax, no PAT, 28,000. Opportunity cost of capital, KO, in this case being 10%. Now you have to find out the EVA. You have to find out the EVA. Is that okay? EVA is equal to no PAT minus capital employed into KO. No PAT here being 28,000. Capital employed being 2 lakhs. Multiplied by KO here being 10%. Then your EVA being 8,000. Clear? Now, we'll go here, enhancing EVA. So, our intention is to get good EVA. Now, you have to enhance the EVA. You have to enhance the EVA. Increasing operating profits without adding further capital. How do you enhance the EVA? No PAT minus capital employed into KO. First point, you increase this. If you increase this without changing this, definitely your EVA will be increasing. Your EVA will be increasing. If you are increasing this, definitely EVA will be increasing. Or ensuring ROI is greater than K for the additional capital. If you are further investing, that further investment should give the ROI higher than the cost. Higher than the cost. Is that okay? Liquidating non-productive capacity. Some investment, so you have 1 lakh rupees to be invested. The ROI on this investment being 12%. But cost for raising this 1 lakh is 15%. What you can do? Stop investing this. If ROI is 12%, cost being 8%, then you can invest here. Then you can invest here. Existing any business gives you return less than the cost, you wind up that entity. That's how you can enhance the EVA. Now EVA center. EVA center is nothing but one of the divisions. In an organization, you are segregating that to divisions. Like cost center, profit center, investment center. These are the responsibility centers. The organizations are divisioned. Okay. division A, division B, division C like. Division A may be cost center and B may be profit center and C may be investment center. Some may be revenue center. Some may be revenue center. Revenue center. Now in your college, as you are aware about the operations of college, think over cost center. Think over cost center. Is that okay? Especially for library, sports, office, where we are incurring only cost. Where we are incurring only cost. What could be our intention? We have to minimize the cost. So we are making some person responsible for minimizing the cost here. We set the target and he is responsible for reducing the target cost. It should not cross the target cost. And he has to report why it is crossing and all. By doing this, we can reduce the cost. Profit center. Profit center. Profit center we'll discuss later on. We'll try to finish up the investment center. Investment center is nothing but every year the chief accounts officer or financial officer may have the idea to expand. This year we plan to invest around 10 crores rupees or 15 crores rupees like that. While the investment should fetch ROI higher than the cost required for investment purpose. Verifies and investors. So their investment decision is based on capital budgeting and based on this one. This is called investment center or making somebody responsible for this. Revenue center. Revenue center. Revenue center. Revenue center is nothing but selling department. Will insist the sales department head to ensure the increase of the sales. Last year you sold 10 lakh rupees, this year you have to sell 15 lakhs rupees. That's how we push. Profit center involves both sales as well as profit. It's combination of these two. You have to monitor. Divisionalizing the organization and responsibility accounting segregates. So segregates and we are segregating all these things. So this responsibility accounting, we have the subsequent chapters. While learning that, you will be able to understand this one. So not worry about this one now. You now understand the organizations are grouped into small divisions like. Grouped into small divisions like. Hope you'll be now able to understand all these things. Okay. Now, EVA drivers. EVA drivers. Okay. Economic value added increases. That's called EVA drivers. What are the things will be increasing the economic value added? Operative decision, investment decision, financial decision. All these things are idea about this one. So, not more than that. So, a small theoretical background is also open. We'll try to solve the question number 2 here. Calculate EVA. You know that EVA is equal to what? No PAT minus capital employed into KO is the EVA. Right. Here we have been given debt, equity capital, resource, risk-free rate, beta factor, market rate of return, equity risk premium, everything is given. Operating profit after tax. Okay. So no PAT in this case being 2100. Tax rate given. Capital employed is nothing but summation of all the fund investments made. Debt, equity, resource and surplus. This will be called capital employed. How much is that? 10,000 will be the capital employed. Now, what about the KO? Usually, KO should be given, but here KO is also calculated. For the KO calculation, let me first find out the KD. For the KD, interest by debt into 1 minus T. Post-tax KD. 12% will be the interest for every 100 rupees. Tax rate being 30%, 1 minus 0.3. Yes, come on, tell me. 8.4 percentage. KD. 8.4 percentage. Okay, KD. For KE, you have to depend on what? Beta is given. So, beta will be used here. RF plus beta into RM minus RF is the formula as per the CAPM model. As per the CAPM model. Risk-free rate of interest in this case being 9%. Beta here being 1.05. RM being 19%. RF being 9%. The difference between these two is the risk premium also given, which is nothing but the difference between these two. Then ultimate value here being 19.5%. And now we have to find out the KO. KO is equal to weight of debt into cost of debt, weight of equity and cost of equity. Weight of equity and cost of equity. What is the weight of debt? Debt being 2000, equity being 8000. Otherwise, 0.2 is the debt, 0.8 is the equity. Equity represents equity share capital as well as reserves and surplus both. So, debt being 0.2 into cost of debt being 8.4% plus weight of equity being 0.8, cost of equity being 19.5%. Then ultimate value here being 17.28%. I can use this 17.28% here. Then this value here being 1728. If I subtract, then EVA here being 372 crores. Rupees in crores. Rupees in crores. Clear? Text me, we'll move on to the next illustration. Make it faster. Yeah. The following information is supplied by ABC Limited. PAT, interest, PAT is given. What we need to have? No PAT is required. Net operating profit after tax. Net operating profit should not be after interest. It should be before interest. Operating profit should be before interest. So here interest is there. You have to get the no PAT here. Equity capital and accumulated surplus will be the shareholders' funds. This is long-term debt. and this is capital employed. This is market value, market capitalization. Market capitalization. Usually we will take from the book value only, capital employed. Risk-free rate given long-term market rate based on BSE. This is RF, this is RM, this is tax rate. We have been given different betas for the various period. In that case, the highest beta 1.1 will be taken. Now find out the KE. KE is equal to RF plus beta into RM minus RF. RF in this case being 12%, beta 1.1, RM 15.5, RF being 12%. RF being 12%. Now final KE in this case being 15.85%. 15.85% KE. And I need to know the KD. For the KD, interest is 4.85, loan fund is 3.37. Interest by debt after 1 minus T will be taken here. Interest being 4.85, debt being 37, 1 minus tax rate being 0.25. Then this ultimate value being 9.83%. Then KE is equal to RF plus beta into RM minus RF. RF in this case being 15. Okay, K is already calculated, sorry. KO to be calculated. KO is equal to weight of debt into cost of debt plus weight of equity and cost of equity. Weight of debt being out of 777, 37 will be the debt weight. So 37 divided by 777. Cost of debt being 9.83. Weight of equity is 740 out of your overall capital employed 777. Cost of equity being 15.85. Then the ultimate value here being 15.56. So we have been given the no PAT, but you have been given PAT, but you need no PAT. For the no PAT, how do you calculate? PAT plus interest after tax. Interest after tax. Otherwise, EBIT minus tax. So here PAT being 205.90 plus interest being 4.85, 1 minus tax rate 25%. Then what is the final value? 209.54. Now you can find out the what? The final one, EVA. EVA is equal to no PAT minus capital employed into cost of overall capital. No PAT being 209.54 minus capital employed being 777. In the cost of capital, we have calculated here 15.56%. What is the ultimate value here? 88.64. 88.64. Yeah, make a note of it. Now we'll move on to the next one. Question number 4. XYZ Limited furnished the following information from which you are required to calculate economic value added. Equity shares, debentures, 1,58,200 numbers at rupees 1000. Then come on, tell me. In lakhs you can calculate then. In lakhs. What is the total equity shares? In lakhs means 1.58, 2 lakhs into 1000, 1582 lakhs for equity shares, 50 lakhs numbers of debentures at rupees 10 each. Then overall debentures being 500. And we have been given securities premium, free resource, capital resource and all. The total of these three resources are for equity shareholders only. So with that you can add the equity share capital 1582. What about the total equity? 2000 I think so. Debt being 500, equity being this one. And capital employed should be 2500. Capital employed is 2500. Is that clear? It is the prevailing practice for companies in the industry to which XYZ belongs to pay at least a dividend of 15% per annum to its shareholders. Okay. Now come on. Find out the KD. KD is equivalent to interest by debt into 1 minus T. Here 12% is the interest. T being 30%. What is the final value? 8.4%. 8.4%. Now, no PAT. No PAT. No PAT is missing, but financial leverage is given. As per the financial leverage, operating profit or EBIT minus interest is the EBT. The link between these two is called financial leverage. Is that okay? You might have studied in leverages in financial management. Okay. Sales and contribution. You have studied that in operating leverage and financial leverage. Finally, combined leverage. So financial leverage is the relationship between EBIT by EBT. This is 1.1 means operating leverage. Operating profit 1.1 means EBT should be 1, interest should be 0.1. Is that clear? From this, we can find out the interest easily. 50 lakhs numbers of shares and 10 rupees each, interest applicable being 12%. You multiply all these things. 50 lakhs into 10, 500 lakhs into 12%. Your interest component in this case being how much? 60 lakhs. 0.160 lakhs means 1.1 should be 660 lakhs and EBT being 600 lakhs. Clear? Hope now you'll be able to understand. Now we need to find out the EVA. EVA is equal to no PAT minus capital employed into KO. We know capital employed, which is 2,500 lakhs. No PAT. We got the EBIT. For the no PAT, I have to calculate here separate. No PAT is equal to EBIT into 1 minus T. If the EAT is given, EAT plus then EAT plus interest after tax. Is that okay? Interest after tax. Here is no PAT is equal to PAT plus interest after tax or EBIT after 1 minus T. You can follow one of the formula. Okay. Here we have been given EBIT, so from that EBIT you can subtract tax directly. Okay. EBIT in this case being 660 into 1 minus T being 0.3. Come on, get me the no PAT here. 462 lakhs. 462 lakhs. I put the value here. 462 lakhs. Now I need to know the KO. For the KO calculation, weight of debt, cost of debt plus weight of equity, cost of equity. Weight of debt, out of 2,500, debt component is 500. It means 1.2 and 0.8. 20% of your capital employed is the debt. This is capital employed. 2,500 is the capital employed. Debt component on this being 500, other is 20%, and this will be 80%. So 0.2 is the weightage and KD being 8.4%. Weight of equity being 0.8, and I have to get the KE. How do I calculate the KE, sir? No information is given, then KE can be calculated using what? D bar P0. We have n number of models. D bar P0, D bar P0 plus G, and CAPM model also we have. Earnings by price models, earnings by price and G model. All these things are not considered in management accounting but applicable for the ratio analysis system. Means the cost of capital in financial management. No other way but at least pay a dividend of 15%, and this will be considered as KE here. Understand? I put this 15% being KE here. Now solve this illustration. Now what is the final value? 13.68. Hope if the CAPM model is not applicable, then you can use this formula. Now here 13.68 is used here. The ultimate EVA in this case being 120. Ultimate EVA being 120. Clear? Make it faster. Make it faster. Listen, we try to finish up this one. It's very easy illustration. Find out the EVA. EVA is equal to no PAT minus capital employed into cost of capital. No PAT is 25,000. Total asset is given along with the current liabilities. Current liabilities is not capital employed. Capital employed comprises only long-term fund. In case of current assets, current liabilities, it should be subtracted. Then capital employed in this case is 60,000 rupees. Only because of that, this illustration is added. Cost of overall capital being 10%. Then EVA being 19,000. Hope you will be now able to understand this. Clear? To make you understand that the capital employed should not consist current liabilities, this illustration is added. Otherwise, this illustration is not required at all. Okay, we'll resume the class after the break by 11:30. Finish up copying, then you can take the break. Let's now start with learning curve. Learning curve is nothing but time consumption for manufacturing any item will be higher in the very first unit. If you are repeating the same again, time consumption may be reduced. For the first unit, time required being 10 hours. Okay. For the second unit, actually if it takes only 8 hours, means he has a learning effect of 80%. 80%. This is called learning effect. He consumes only 80% of the time. If you solve an illustration, it takes around 1 hour. If you are repeating the same illustration, the next time, you will finish up in matter of say 50 minutes. Thereafter, if you are repeating once again, you can finish up by 40 minutes. That's how the time consumption will be reduced. Okay, the reduction percentage is called learning effect. And once the number of units you doubled, the time consumption will be adjusted as per the learning effect. What about the fourth one? The time taken for the average time taken for this fourth item being 80% of 8 hours, 6.4. Is that clear? Then doubled. Doubled means eighth one. 80% of 6.4. Come on, tell me, what's the value? 5.12. Clear? This is how you can find out the average time. And how can you find out the total time? Very simple. You multiply the quantity and the average time. For 1 unit, 10 hours needed. For 2 units, 2 into 8, 16 hours needed. For 4 units, 4 into 6.4, 25.6. And for 8th unit, 8 into 5, 40.96. This is what about the total time. If the hourly rate being 100, if the customer comes and orders 1 unit, what will be your billing? Total time required for producing 1 unit being 10. And naturally, 10 into 100, 1,000 rupees you will charge only for the labor, apart from the material and other cost will also be recovered. Material cost and overheads. Another customer comes and gives us an order of 4 units. What's the value you charge? For 4 units, total time taken being 25.6 per hour, 100 means 2,560 will demand. Clear? Suppose A comes and orders 1 unit. We asked him to pay 1,000 rupees for labor. Same A gives a repeat order. Okay. So A gives repeat order of another 3 units. As per the labor cost per unit being 1000 for 3 units, it should be 3000, right? Because of the learning effect, the same work is again repeated. Time consumption will be drastically reduced. Because of reduction of time consumption, there is a savings in labor cost. That benefit also be reflected in the pricing. For 4 units, we have now prepared for A. For 4 units, the overall labor cost to be 2560. Already he has supplied with one. He has been supplied with 1 unit, and we charge the labor cost 1000. For the additional 3000 unit, we will now recover only 1560. Is that clear? Material cost will be the same, variable cost. But labor cost, due to the labor efficiency for the subsequent production, the labor consumption, time consumption will be reduced, and because of that, labor cost is also reduced. This benefit is transferred to the consumer by reducing the sales price. Clear? So, learning curve is nothing but effect of learning in reducing time taken, thereby reducing labor cost. That's the logic of learning curve. Clear? Now, the problem here is, what about the average time for third unit, sir? Fifth unit, sixth unit, seventh unit. So the learning effect, based on the learning effect, 80% of this, again doubling means 2 to 4, 80% of the average time consumed for 2 units, 4 to 8 doubling. Okay, 80% of this one, again doubling means 16. 80% of this will be taken. Clear? Hope we will now be able to understand the logic. But in between, I need to know the average time. Then you can plot that in a graph. In the graph, so unit 1, 2, 3, 4, 5, 6, 7, 8, and 9, so on. Okay, the average time being 2, 4, 6, 8, 10, and so on. For the first unit, average time being 10. For the second unit, the average time being 8. For the fourth unit, the average time being 6.4. For the eighth unit, it is 5.12. If you draw, then you'll be getting a graph line. This is called learning curve graph. Learning curve. This curve is the learning curve. If you want to find out what is the time, average time for the fifth unit, you connect directly here. Maybe somewhere here. Maybe somewhere here. Other than this number 1, 2, 4, 8, 16, in between, if you want to calculate, then you need to depend on the learning curve formula or equation. The total cost you might have studied, right? So what is the total cost in case of marginal cost? Total cost is equal to fixed cost plus variable cost per unit multiplied with the quantity. Okay, otherwise it may be stated mathematically y is equal to a is the fixed cost and b being the variable cost per unit into x dx. X is the units, it will be varying. This is how mathematically represented. If you plot this ratio, this equation, you get the graph this way. Am I right? This is the total cost curve. You might have studied that in BEP. Up to this is fixed cost. Thereafter, variable cost. These two put together will be the total cost. These two will be total cost. Hope you will be now able to understand. The same formula is slightly modified here. Y is equal to a x to the power b. That bx is now converted into x to the power b. X to the power b. Clear? Y is equal to here. This curve, learning curve equation appears this way. Y is equal to a x to the power b. What is called A, sir? A is nothing but the time taken for producing the first unit. Time taken for the production of first unit. B is nothing but learning effect coefficient. Learning effect coefficient, 80%. But the B you have to calculate separately. Log learning effect divided by log 2. You have to apply this formula. Y is equal to ax to the power b, b is equal to log learning effect divided by log 2. Learning effect may be 80%, 70%, 50% like. Usually no, it may be anywhere between 80, 85, 90, 95. That's how most probably in examination the question may be asked. For everyone, 80, 85, 90, 95, some students may memorize the B also easily. 80 means log 0.8 divided by log 2. You can simply memorize this number. So whenever the B is there, you can fit that B in your equation easily. Again, it is x to the power b. You need to use the power formula. For that also, of course, you need to depend on scientific calculator, or there may be some factors given in the question. You have to feed that directly. So with this small briefing, let's start this illustration. Time taken to produce first unit is 10 hours. The learning curve effect for the job is 80%. Labor hourly rate being 200. Find out average time, total time, labor cost for the following options. Units 1, 2, 4, 5, 8, 10. For these units, they have to find out the average time. These are doubling, right? These are doubling. For the doubling, it's very comfortable. What's the average time for the first unit? 10 units, 10 hours. For second, as the learning effect being 80%, 0.8 will be the 8 hours will be the value. For 4, 6.4 will be the value. For 8, 6.4 into 80%, 5.12. But 5 and 10, we cannot assume the same way. We have to depend on the formula. Now, y is equal to a, b, sorry, x to the power b. B is equal to log learning effect divided by log 2. Log learning effect being log 0.8 divided by log 2 being 2. Is that okay? Log learning effect divided by log 2. Now, we'll try to solve this using the scientific calculator. 0.8 log numerator value being 0. Minus 0.0969 minus 0.0969. Then log 2 value being 0.3010 0.3010. Then b in this case being minus 0.32196. So usually the students may memorize this. Learning effect 80%, the b should be minus 0.32196. That's how they will memorize. Of course, not repeated in your examination. Most probably it may be given, or log value may be given. So you can apply the log value to calculate. So for 5 items, average time for 5 items is equal to time taken for the first unit being 10 into number of units supposed to produce here being 5 to the power b being minus 0.32196. The fourth illustration, there all the factors are given in the examination. I use that factor to solve this illustration wherever the log is required. But here never bother about that. I use a scientific calculator. For the other normal calculator, in the examination they will give the values also. Such a question is going to be solved in the fourth case. Okay, no need to worry about it. Here just listen. Now see here, 5 to the power 0.32196 negative. Is that okay? 5 to the power multiplied with 10. So the average time being 5.956, otherwise 5.96. So you know that this value should be in between these two values. Am I right? As the average time consumption is reducing one after one, for 4 it is 6.4, for 8 units it's 5.12, means the number should be anywhere between these two. We got it. Similarly, if finding the average time for the 10th unit, 10 into 10th unit to the power 0.32196. By solving this, you'll get 4.765. 4.765. So here 4.765. So find out the average time. In case of average time, the number is doubled, it's very comfortable. Where it is in between the doubling number, 4 to 8 means 6, 7, 8, 5, 6, 7 will be trouble. For that, you have to depend on formula only. Okay, you understand? Now, total time requirement is nothing but multiply these two, you will get the total time. So, 10 hours, 16 hours, 25.6 hours, 29.78, 40.96, 47.65. What is the labor cost? You have to multiply this with hourly rate of rupees 200. So this value being 2000, 3200, 5120, 5956, 8192, 9530. Now, what happens here? You have to find out the average cost for 4 units to 8 units. How will I get this, sir? For 8 units, the total time taken is this one. For 4 unit is completed, produced in 25.6 hours. It's the next set of 4 to 8. Already you are experienced. Up to 4, you already got experienced. From the 4th unit onwards, to produce 8 units, you are being the experienced, the time consumption will be lesser. The time consumption is the difference between the total time for 8 and total time for 4. What is the value you are getting here? 15.36. This 15.36 is to produce next set of 4 units, and what is the average time? 15.36 divided by 4. Average time being 3.84. Hope you will be now able to understand this. And what is the labor cost for the next set of 4 units? 15.36 per hour, it's 200. So you have multiplied these two. Then the final value being 30,772. 3072. 3072 will be the total labor cost for producing the item 4 to 8. Already we experienced by producing 4. For the first 4 units, we build 5,120. For the second 5 units, we build 3,072 only. Clear? Hope now you'll be able to understand. Come on, make a note of it. If it is clear, text me. Now, let's see. The third question is a unique one. Okay, all the four questions are totally different illustrations for your better understanding. I started with from some basic concept illustration number 1. In the second illustration, we supposed to calculate the labor cost in detail. And in third question, it's a pretty different. We have to find out the overall cost for producing additional unit. And in the fourth question, it's all about exam based question. All these values are given in the question itself. No need to worry about the log table and all. It may be given in the question paper itself. So no need to worry about that. Is that okay? Let's now go for the question number 2. A firm has received an order to make and supply 8 units of standard product, which involves intricate labor operations. So 8 units required. The first unit was made in 10 hours. So unit. First unit can be manufactured in 10 hours. Then total time being 10 only. It is understood that this type of operation is subject to 80% learning rate, and the workers are getting wage rate of rupees 12. So in terms of rupees, multiply with 12, 120 rupees you are spending for the first unit. Now they have asked to calculate for 8 units. For the 8 units, you no need to depend on the formula, right? Because 1, 2, 4 you can very easily jump. So for 2, for 4, for 8. As learning effect being 80%, so here 8, here 6.4 and here 5.12. 5.12 into 8 units, what is the total time required? 40.96. 40.96. Now what is the total cost? 40.96 into 12, 491.52. What is the total time labor cost required to execute the above order? So total time is also be calculated, 40.96, and labor cost for the above order being this one. This is the answer for the first one. Clear? Hope you will be now able to understand without using the scientific calculator or tension about the log and all. Next, if repeat order of 24 units is also received from the same customer, what is the labor cost necessary for the second order? Repeat order. So repeat order means already we have done 8. With the repeat order 24, overall we are producing 32 units. So naturally, I need to find out the average time for 32 units. 8, 16, 32. The average time for 16 units being only 80% of 5.12, 4.096. For doubling, again 0.8% on this value, 3.2768. And total time being, you have to multiply average time with the units produced, 104.86. And what about the labor cost? You multiply this total time consumption with 12, you will get 1256.32. So for producing 8 units, we are in need of 40.96 hours and it costs us 491.52. Additional 24 units means it is the units production in between 8 to 32. This is going to be produced. For 32 units, the total time being 104.86 and cost being this one. But my requirement is, what is the time required as well as cost required for producing the units in between 8 to 12? Then you have to find out the difference between these two. Yes, come on, tell me. What is the total cost you supposed to incur? 766.80. What is the total time? 63.9. Of course, you have to calculate separately this one. 63.9 is the time spent for producing 24 units. Additional 24. It's not first 24. Additional 24. 63.9 divided by 24. 2.6625. 2.6625. Is that clear? This is what about the average time. Average time. Clear? This is all about second one. Answer for the second one. Shall I move on to the next one? Hope now you'll be able to understand this one easily. What is the average time and total time for 10 units? Now 10 units. For the 10 units, we cannot use a tabular model. We have to depend on the formula only. So for the formula, y is equal to, before we go for calculating y, first of all, we need to find out the b. B is equal to log learning effect divided by log 2. Learning effect being 80%, so log 0.8 divided by log 2. So you already calculated the value for this minus 0.3219. This value was already calculated in the previous illustration, so I feed the same details here. Most probably in examination, I've seen it may be 80% or 90%, like, or sometimes 85%. You better memorize these three numbers, roughly at least. But don't take the pain of memorizing. Maximum in your examination, these numbers are given. Yet, to safer side, if you have the time, you can memorize this. Okay, log learning effect divided by log 2, then directly post the value 0.32196. Now, average time for the 10th unit, this one, 10th unit for the third question is equal to a plus x to the power b, sorry, a into x to the power b. Okay. Now, okay, xth unit. 10th unit is equal to first unit produced at 10 hours multiplied by 10th unit to the power b being minus 0.3219. 10 to the power minus 0.3219, calculate that and multiply with the 10. So average time here is equal to 4.765 average time. Total time being, you have to multiply with the 10, 47.65, and in terms of rupees, you have to multiply with the 12, 571.80. Is that okay? Clear? Now, in case of fourth unit, what is the average time and total time for the order range between 10 to 20 units? For 10 units, we knew the total time being 47.65. But they ask about 10 to 20. Then what do you have to do? You have to find out the average time, total time for the 20 units and find the difference between these two. Fourth one. Average time, otherwise y for the 20th unit is equal to 10 into 10 to the power minus, sorry, 20 to the power, 20 unit, no? So 20 to the power minus 0.3219. The average, ultimate average time calculated in this case being 3.8124. Then total time should be, multiply these two. This one multiplied with the number of units, 20 units. 76.25. And in terms of rupees, multiply with the 12, you will get 914.98. 914.98. Now I am going to calculate average time, total time and all for in the range between 10 to 20. Okay. Total time being The difference between these two, 76.25 minus 47.65. Come on, tell me. 28.60. And total labor cost, the difference between these two are multiplied with 12. 343.18. Now what is the average time? Average time is the total time for this one, 28.60 divided by 10, 2.86. 2.86. Hope now you'll be able to understand the answer calculation for fourth question. What is the learning effect if every time new employee is assigned for the performing the job? What about the learning effect? Every time you are employing new employee, then he has not learned. It's a new job for the new employee. So learning effect in this case is equal to 0. The same person, same job, once he repeats the same job to the same person, then learning effect will play. Okay. If you are recruiting every time different person, he spends the time for the learning, so definitely there will not be any benefit due to the learning effect. Clear? So with that, question number 2 is over. Question number 3. Dynamo, a manufacturer of aircraft parts, has been asked to bid for 900 units of a particular type of component. Very interesting illustration. The uniqueness of this illustration is, I told you no, first unit and doubling, second unit, doubling, fourth unit. It is not first unit, second unit, fourth unit, eighth unit. It's what about the first lot, second lot and third lot and so on. 4 months ago, the company had produced a first lot of 400 units. So here I am going to consider the lot, not the units. One lot consists of 400 units. Okay. Units per lot. The cost details of the first lot given. The repeated assembly of this type of component experiences a learning effect of 85%. Most probably it's only 80, but sometimes it may be 85. So 80, 85, 90. These are the 3 famous learning effect may be given in your questions. The cost benefit of this type, this will be reflected in this bid price. Already we have produced 400 units in the first lot. Now we get one more same repeat order, like need to produce 900 units. Need to produce 900 means in total we are producing 1300 units. Is that okay? 400, now we are supposed to produce 1300, only then we can find out the difference between these two, 900 units. One lot is equal to 400 means 1300, how many lots will be there? 3.25 lots. Is that okay? 3.25 lots. Is that clear? It is not unit number 1, unit 2, unit 4, unit 8. It's the first lot and repeat of the same lot. First 400, then next may be 800, then 1600, then it may be 3200. That's how it's going on. Dynamo follows a policy of setting a selling price of 30% gross margin. So they want to add 30% profit. Tooling cost have been fully recovered from the first lot sold. Tooling cost is already recovered. Determine the selling price per unit for the second lot. Second lot is this one. This is the first lot. This is the second lot. Second lot is order size of the lot being 2.25 lot is equal to 900 units. Is equal to 900 units. Direct labor being 8,000 hours. This is the average time for the first lot, 8,000 hours. First lot consisting 400 units can be manufactured in 8,000 hours. Second lot means if you produce another 400, as you are having 85% learning effect, come on, find out the 85% of this one, 6,800. Then fourth lot consisting of 1,600 units can be produced in 85% of this time, 6,800. 5,780 will be the answer. Is that okay? But I am in need of what? 1300 is anywhere between these two, and the lot size could be 3.25. Lot size being 400, but number of lots being 3.25. Now you have to find out this value. Is that clear? Then we have to depend on what? Formula. First, we will finish off the learning effect coefficient. B is equivalent to log learning effect divided by log 2. Log learning effect being log 0.85 divided by log 2. This answer being minus 0.2345. Interesting number. In case of 85%, you can very easily remember the learning coefficient B, which is minus 0.2345. Okay. So in your examination, you don't need to worry about calculating that. You feed the data and arrive the answer directly. Okay. B is over. The next one being, you have to find out the average time for 3.25 lot is equal to first lot time, average time for the first lot into b to the power x to the power b. So first average time being 8000 into 3.25 is the lot size. B is equal to minus 0.2345. Apply the scientific calculator to get the value. Never bother about the calculations part here. We will bother about that in the next illustration. Here it is not required. Then final value here being 19,721. So 19,721. Sorry, 6,000. I made a mistake. This will be 6,068. 6,068. $6,068. Now, what about the total time? What is the total time? Initially, 8,000. 6,068 into 3.25. 19,721. But we need to find out the total time for the incremental order size. This will be 11,721. Now, the cost structure is all about for 400 units given in very first order. Now we have to find out the cost structure for repeat order of 900 units. Repeat order of 900 units. Direct material 30 lakhs. Usually direct materials are always variable in nature. As 30,000 is for 400 units, for 900 units into 900 by 400. Okay, proportionately changing. Come on, tell me the value. 67 lakhs 50,000. In case of direct labor, the hour required for producing 900 units, repeat order of 900 being 11,721. We got it here. Per hour cost us 250. Now find out the labor cost. 29 lakhs 30,250. Tooling cost. They have purchased the tool already while manufacturing 400 units. Still the tool is available. For the repeat order, you don't go for purchasing again. So now the tooling cost is 0. Already we purchased and keep all the tools ready. For the further manufacturing, already tool is there. You don't spend again for the tool cost. Variable cost, proportion to direct labor. Proportion to direct labor means this 9 lakhs is for 8,000 hours. For 11,721 hour, what would be the value? You can calculate this way. Not 9 lakhs. Okay, I do a small change. This way you can calculate. I have a doubt here. You just see what is the percentage of variable overhead, overhead recovery rate. 9 lakhs is for 20 lakhs means 45 percentage. Then you can calculate 45 percentage on the direct labor for the variable overhead. Come on. You will get 13 lakhs, 18,630. Is that clear? Clear? Are you getting? General overhead also be same. For 20 lakhs, 12 means 60 percentage. Find out 60 percentage of the direct labor cost. This one being 45 percentage. This one being 60 percentage. 17 lakhs, 58,150. If you add up, then the total cost being 1 crore 27 lakhs 57,013. While fixing the sale price, they add 30 percentage GP. So cost, profit, and sale price. If the sale price is 100, profit being 30, your cost being 70. Here our manufacturing cost being 1 crore 27 lakhs 57,013, which is equivalent to 70 percentage. And what about the profit component? Into 30 by 70, 54 lakhs 67,291, and your sales being add up these two, 1 crore 82 lakhs 24,304 for how many units? 900 units. 900 units. So you divide this by 900. Then this value being 20,249 will be the selling price per unit. Selling price per unit. Clear? If it is clear, text me. So we'll move on to the next illustration, question number 4. And then the last illustration. Now, question number 4. Here the learning coefficient C for 80% is already given. Log 2 value, log 3 value, log 5 values are also available, along with anti-log also. This log and anti-log can be used for the power calculations. Okay, very rare. Okay. Anyhow, I just use this one for your calculations purpose. The chief engineer of a manufacturing plant and manufacturing parts for aircraft observed that Workers performing manufacturing operations in the plant showed signs of definite learning pattern. It's a learning pattern. He noted that most aircraft manufacturing tasks experienced what he called an 80% learning rate. So learning effect is equal to 80%. And learning coefficient B is equal to minus 0.322. That information is already given in the question. Learning means log learning effect divided by log 2 is already given. You don't need to memorize this. Meaning that workers need 20% fewer hours to make a part each time. Their cumulative experience taking that part doubled. Part doubled. First 1 and 2 and 2 to 4, 4 to 8. That's what about the double by the time. Consumption of time reduces by 20%. That is what about the learning effect. That you know already, but they are explaining here. If the first part took 100 minutes, the second would be 80 and fourth would be 64 and so on. That you know already what is learning curve, so it is not required at all in the question, but it is to give you further guidance. Calculate the time required for the parts between 41 to 860. Now you have to calculate average time for 40 units is equal to time taken for the first units being 100 minutes into for the 40th unit 40 to the power minus 0.322. This is what about the average time. And average time for 60 unit is equal to 100 into 60 to the power minus 0.322. Okay. Now, how will I calculate this one, sir? Y is equal to 100 into 40 to the power minus 0.322. I have to multiply log in both the sides, then it becomes log. How many of you have the idea of log? You didn't study. Okay. Okay then. If you don't know log, no need to worry about that. Okay. Without log, the power calculations can be done. There is a shortcut I have taught in the videos already given. Go and see that. Go and see that. So in free lectures of Singar Academy's blogspot, calculator tricks, 10th one, finding log, anti-log using basic calculator, and finding power and nth root of anything for using the basic calculator. You just see this video. This log also not required. At least this video you can see, and you can, for the emergency purpose, you can use it. For the emergency purpose, you can use it. Log y is equal to log 100. Okay, multiplication becomes plus and power becomes multiplication. So plus minus 0.322 log 40. Otherwise, it's only minus value. Minus 0.322 log 40. Minus 0.322 log 40. Now, usually log 10 is equal to 1, log 100 is equal to 2. Okay, this is better, you can understand. In Tamil video lectures, no, the log application lecture is available, go and see, but it's very rare. But out of your interest, go and see this. Log 10 is 1 and log 100 is equal to 2. So log y is equal to log 100 is nothing but what? 2. Log 100 is nothing but 2. Log y is equal to 2 minus 0.322 and log 10. How can I get the log 10, sir? Log 10 can be, 40 can be separated this way. How? You can take the factors. 40 maybe 5 into 8, am I right? 5 into 8, 40. We have been given log 5, but log 8 is not given, then this can also be taken as a factor. 5 into this 8 is nothing but 2 into 2 into 2. Is that okay? This will be factor. If I segregate this one, this can be rewritten this way. Log 5 plus log 2. This log 2 comes how many times? 3 times. Log 2 plus log 2. This is how you can decode this value. So, log 5 being 0.69897 plus log 2 being 0.30103, but this is 3 times, no, you can multiply with the 3. Then ultimate value in this case being log y is equal to 1.4274. But I want to know the y value. So y value is equal to, take the anti-log of this. Okay, anti-log for 1427 is equal to 26.75. So 26.75. 26.75. Now I'll post this value here. 26.75 per unit average. Then what about the total time? For 40 units, this is average time, total time being, you multiply this with 40 units, 1605.0. 1605. Is that clear? I have not seen application of log based illustrations in the past year's question paper. Very rarely may come, but anyhow you can break easily by using the formula shortcut calculator tricks I have given, no, that you can depend on that, you will get the answer without depending on these factors, numbers given here. Similarly for log 60, y is equal to the same way, y is equal to 100 into 60 to the power minus 0.322. I multiply log in both the sides. Log y is equal to log 100 into, this power becomes multiplication, but minus symbol is there, so I put the minus 0.322 and this will be log 60. But 60 log details is not given, but you can break this. How? 5 into 3, 15 into 2. 60, 30 into 2 will be 60, right? So 5 into 3 into 2 into 2 will be 60. Factors is found out. Now log y is equal to log 100 minus 0.322 into log 5, log 3, log 2 and log 2. Is that clear? So log y is equal to log 100 is equal to 2 minus 0.322 and log 5 is given here 0.69897 and log 3 is equal to this value 0.47712 plus 2 times of log 2 being 0.30103. You will get the value log y is equal to, this value 1.484. In case of simple y, you have to find out the anti-log of this one. So anti-log of log 1484 is equal to 30.48. 30.48. So here this value being 30.48 per unit. For 60 units, what is the total time? Multiply with 60. So 1000. I think first one being lesser number, right? I made a mistake here. This is 1219. 1219.2 here. 1605. The difference between these two is the time required for manufacturing the units in between 40 to 60. 385 hours. 385.8 hours needed. Okay. So if you are not aware about the application of log for calculation of this item, anything power, okay, anyhow this calculator tricks is already available in our free lectures video. Go and see calculator tricks. I'll give the steps here once again. Okay, so x to the power n you assume if you want to calculate. Step 1, x, take the root of this x 12 times in your non-scientific calculator. Approximately you will get the closer number, but may not be. And then after that, subtract 1 from here. Third, with that number you multiply that power n. Fourth step, again the minus 1 is added back here. And fifth one, you have taken the root, no, reverse this, into equal. You have to press into, again equal, how many times? 12 times. You forget about the log tables here for any power. So here 40 to the power minus 0.322. Okay. So in your non-scientific calculator, standard calculator, x being 40, take the root of this. Come on, once, twice, thrice, but I cannot calculate it here. You can try it yourself in your calculator. 12 times. Okay. 40 plus root 12 times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Here you will be getting 1.0018028. Now you have to subtract minus 1, then it becomes 0.0018028. With that you have to multiply with the n in this case being minus 0.322. Then this value being minus 0005805. With that you have to add plus 1, so you will get 0.9994195. Now press into equal once, similarly 12 times. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Then ultimate value you will be getting here is 0.09269. Is that okay? I think you get slightly different answer. I cannot work properly in calculator. Try it yourself at your home. This is how you can get the answer. Okay. What's the answer you're getting? But this is not the correct answer, I think. Okay. What you have to do? If you multiply with 100, it should be, see, you need to get 26.75, right? Okay. There may be some errors then. Okay. You can try it yourself, you will get. Okay. The correct answer being 0.3 something. If you multiply with 100, it's almost 30. Otherwise, you are getting 0.3. 0.3. Otherwise, into 100, it may be 26. Okay. Slight errors is there. You can, it's an approximate only. It's a crude formula. Okay. You can depend on this one also. No issues. Or you can use the log calculation tricks also for this calculations. Okay. But anyhow, no need to bother about those things in your examination. You can usually skip this log calculations and all for your examinations. Very rare. Okay. We'll go for a balanced scorecard. As well as for, this is meant for variable pay management implementations. Let's see what is called balanced scorecard. What about the intention of the business? Making profit. Making profit and creating a bad image of you among the customers will not live for long life, right? As well as you are building good relationship, good profit is there, but the employees are not satisfied. That will also be a problem. Okay. So what happens here? You need to grow not only in one aspect, you have to grow in all the aspects. You give the importance for that's what about balanced growth. Work-life balance, like work life as well as it's a balance of your work life as well as personal life. Similarly here, BSc is nothing but translates the organization's mission and strategy into set of performance measures. Performance measures, all aspects, provides the framework for implementing the strategy. The BSc's characteristics being strategic alignment, multi-perspective. Multi-perspective means not only financial growth, non-financial aspects also be covered. Satisfaction of the employees, satisfaction of the customers and all. Clear objectives. That too, the objectives is measurable goals in 4 perspectives. We have 4 perspectives here. 4 perspectives. So BSc has 4 perspectives. One is financial perspective, profit earning. Second, customers perspective. You have the satisfied customers. And learn internal business process perspective. So you need to introduce the innovations in your business. Innovation. So that you can develop and match with the current government's market scenario. And help the organization employees to learn and grow. So first is profit. Next one is customer loyalty. Third one is innovation. Fourth one is employees learning and initiative. Their initiative. All the 4 perspectives will be fixed as your goal to improve. Strategy mapping visualizes the cost and effect. What you do to get the result. You need to have the visualization of these 2 relationships. And you have to measure whether the balanced metrics are properly met or not. And communication tool, you have to communicate to all the employees, and it should be facilitates alignment and understanding. You have to align all the activities what you do with the objectives what you're supposed to reach, and communicate this to all the employees in your organization, and continuous improvement. And if you want to change now and then, it should be flexible to change. These are the characters of BSc. So BSc has 4 perspectives predominantly in your examination. You may be asked to write down the 4 perspectives. Okay. The common 4 perspectives are here: financial perspective, customer perspective, internal business process perspective, and learning and growth perspective. Is that clear? Financial perspective, cost reduction, sales growth, profit maximization. Customer perspective, give lesser cost, quality, on-time delivery, inspections before it delivered, and handling, so on. These are for creating the customer satisfaction. Internal business process perspective, efficiency and quality of operations, innovation process, operation process improvement, post-sales service also be taken care here, internal business process perspective. In case of learning and growth, this is nothing but employees learning, acquisition of new skills, and developments of new products. So you have to appoint new employees, or if you are supposed to introduce new product and train them to adapt for the new products manufactured, that helps them maintain competitive position compared to the other organization. That's what about the intention. Employee capabilities measured using education skill level, information system capacity also measured by feedback, motivation measured by employee satisfaction. These are the three parameters we have whether the employees are satisfied or not. So four perspectives are there in BSc. Our intention is to develop and find the reach the goals for all the four, not only the profit element, not only the profit element. Right. Now, a case study is here. I have taken from your institute material only. Taj Laguna Royal is an exclusive resort located in famous place of Andaman and Nicobar Island that vows to isolate its guests from the hustle and bustle of everyday life. So tension-free life. They want to create a tension-free life. Its leading principle is all contemporary amenity wrapped in old world charisma. Come to our place and stay and enjoy the old charisma. All the facilities are available. That's what about their intention, their objective. Each of the resorts, 20 villas has a separate theme like castle, majestic, ambassador, royal, chateau, coconut, lemon, Balinese, etc. So you might have visited some resorts, the rooms, especially the cottage, like each and every cottage is named separately. If you go on book, earlier room number 5, room number 6, here it's a cottage. They will give the name for the cottage to have the good look. What happens in colleges also, auditorium may be named this name. Okay, so immediately students are requested to assemble in this hall. Then automatically you go. So now naming. Similarly, here the cottage, resorts named this way. Often ask for a specific villa. Guests often ask for a specific villa. Sir, I want ambassador, I want majestic, like they demand. When they make reservation, okay, villas are ideal for families and friends traveling together, and these villas features luxurious accommodations spanning 2 floors. Almost 2 floors are there. Since it is located within 100 acres estate on White and Beach, the resort offers its guests a wide variety of outdoor activities such as horseback riding, hiking, diving, snorkeling, sailing, golf, and all facilities are available there to relax yourself. Guests should also, while away the day relaxing in the pool and availing themselves of the resort's world's famous spa. Tax Haven Spa is also available for the guest. The dining room, which only has 3 tables for the public, is acceptable proud of its 5-star rating. Dining room is also provided only for the in-house guests. For the outsider, only 3 tables are served, right? Required. Develop a balanced scorecard for Taj Laguna Royal. It is sufficient to give 2 measures in each of the 4 perspectives. From this, you need to find out the balanced scorecard. So whenever you are asked to prepare the balanced scorecard, so 4 perspectives should be there. You have to now try to find out what could be focused in more in these 4 factors. So here the answer is given. Okay, answer, let's see. Answer is I deleted, so you see the answer in your text. balanced scorecard of Taj Laguna Royal. One is financial perspective. In financial perspective, economic value added should be checked, revenue from per villa. So what's the focus? How can you construct the BSc for this resort? First, financial aspect. Financial aspect, you need to have good EVA. Next one is, among the 20 villas, which villa gives me more revenue? So you need to find out the revenue per villa. That's how you can give your own ideas also. Number two, customer's perspective. Customer's perspective. Now, you can think over repeat customers. Okay. If the customers are repeatedly visiting us, what does it mean? They got highly satisfied. Repeat customers. And how many complaints you get from the customers? And the complaints number should be reduced year after year. So earlier we got 100 complaints. Now we need to reduce that for 10 or 5. Like that's how we can get the target, PSC. And next one being internal business business perspective. Okay. Internal. This is all about innovation. So rating of spa service, staff hours, and cost to spend, rank of the restaurant, and all these things may be a target here. Rank. Okay. The finally innovative and learning aspects. You have to retain the employees in case of employees perspective. In case of employees perspective, learning and innovation perspective. You have to introduce new services so that employees get trained for the new employment or new skill set. And you need to retain the employees. Labor turnover should be reduced. In such a way, you can fix the resources. One is retain the employees. Labor turnover should be reduced. Retain the laborers, and then introduce new skills, new type of services, so that skill set will also be improved. Such a way you can give the answer here. Such a way you can give the answers here. BSc, any case. Now, how do we implement the BSc, sir? See, BSc is successful only on implementation, properly implementation, with the management support, senior management support. First, define the strategic objectives. Second, identify the key performance indicators. Okay, in this Taj hotel, right, resort, the villas and the indoor games, all these things are also the key performance indicator. Why the customers are regularly coming? Because of the villa, or because of the environment, because of the external activity, what makes them to come here repeatedly? Then you can strengthen that. Develop strategic map, set targets for each perspective. 4 perspectives they know. So you have to set the target, what to do in each perspective. Align initiatives with objectives. Communicate strategy across organization. You have to tell this to all the employees in the organization so that they will also follow to reach this one. Support to reach this goal. Monitor and review and adapt improvement needed. Balanced scorecard, not just measuring but also reporting too. It's not only measuring. Report to the management, so we have attained or we have failed to attain. If we fail to attain, how can we rectify and correct ourselves to subsequently reach? All these things are studied in balanced scorecard. And of course, difficulties also there. So predominantly, our focus is balanced scorecard for what? Variable pay management implementation. What could be called variable pay management? Fix the salary to the employees as per their performances. Salary will be variable. If you are outperforming, your salary is also outperforming. If you are not performing, your pay will also get affected. So, main intention of balanced scorecard is adjusting the salary also. Involves aligning performance measures with the strategic objectives. Identify the key goals: revenue growth, customer satisfaction. Already we have studied here. Here the things are given in condensed version. The pay for performance reward, lump sum cash award for every year end, linked with annual salary increase or combination of the above two. That's how the payment may be variable as per the target the employees are reaching. The target is set. Clear? These are the small theory you have to understand. Now the last component is pretty rare, but anyhow I'll just explain this. You can understand easily. What's that? Summary of classification. While you set the goal, you know your goal may be classifiable as financial or non-financial. Financial cost reduction, non-financial customer satisfaction, or employees motivation. Objective and subjective, that's how you can classify. Objective means specific. Subjective is the elaborate version. Objective question and subjective question, right? Descriptive is the subjective, right? In case of objective, 4 choices given, you have to choose one of them. If you are correctly choosing, you will get full mark, else no mark. But in case of subjective, you write as you think, and the teacher will pick the right answer from your answers and use mark. That's what about the subjective. External and internal growth as well as external customers growth. So these are the classifications we have. Now, listed below are number of scorecard measures. These are the scorecard measures are there. And from that, classify each measure according to the following perspective: financial, non-financial, subjective, objective, internal or external. When the perspective is process, identify which type of the process: innovation, operations, or post-sale services. Now tell me, number of new customers. Is it financial or non-financial? Financial or non-financial? If the new customers are coming, your revenue will be increasing. Financial or non-financial? So financial or non-financial? Subjective or objective? External or internal? Yes, in the first case, financial. Subjective or objective? Number of new customers, you can state correctly 5 numbers or 6 numbers. Many employees is subjective, 5 employees is objective. So it is objective. Is it related to the internal or external? We don't have the control. The others will come inside. So external. Hope you will be now able to understand. Right. Percentage of customers complaints resolved with one contract. Financial or non-financial? Non-financial. Subjective or objective? Numbers clearly stated, 5%, 6%, then it is objective. External or internal? Customers are from outside, so external. Unit product cost. Financial or non-financial? Financial. Subjective or objective? Objective. External or internal? Internal side. Okay. Similarly, cost per distribution channel. Cost financial. Cost per channel you can measure properly, objective. Internal or external? Internal. Is that okay? And suggestions per employee. Suggestion, non-financial. Objective, internal, right? Internal. Quality cost. Quality cost, financial. Objective, internal. And product functionality ratings from survey. What else? What about this? Financial or non-financial? Survey. How do you feel about that? We cannot specifically say that. You feel better, the other customer may feel unhappy. So this is subjective. Internal or external? Coming from outside, so external. Cycle time for solving a customer problem. Financial or non-financial? Non-financial. Subjective or objective? Objective. 5 hours, 6 hours, like you can state. And customer related, external. Strategic job coverage ratio. Strategic job coverage ratio. Coverage ratio not related to finance or non-finance. Objective, clearly you can mention it's your side, internal. On-time delivery percentage, non-financial. On-time, sometimes see in the text it is given as financial. You can argue in either way. If you are arguing this being the financial, on-time delivery improves your customer revenue. That's how they have stated. Affects customer satisfaction and financial performance. That's how the answer is given. Because first time I draft this material, I got lots of confusions here, and then refer various online resources also. In some resources, they stated it may be financial, some resources they stated as non-financial. The confusions are there. But if you are stating this being the financial, they are defending with this line. So in Singar Academy text also, I have chosen that one, financial, because it affects the customer satisfaction. Ultimately, it affects the financial performance. So it is considered as finance. Can I name this being the non-financial, sir? Yes, of course you can do. Now, what about the objective? Objective and internal or external? This is customer related, so named as external. And percentage of revenues from new products. Revenue, no, financial. And objective and internal. Lead time product development, it is internal. Product development is not financial, but how many hours you need spent for development is objective, 5 hours or 6 hours. Internal, right? It is internal, not related to the customer. If it is related to the customer, then it's external. Otherwise, it's internal only. I've seen some one-word questions like in this topic. That's why I included all these things also. Okay. Even book back problems are already solved. You can go and see those things also for the better understanding. So with that, we'll finish up this 6th chapter completely. And 7th and 8th will continue in the next class.